Why is buy the retest the safest strategy to enter a trade with? Buy the retest is one of three ways to buy the breakout of a long-term resistance line, and it's one arguably which is a nice balance between risk and reward. So the first strategy, of course, which we've covered in other videos, is where you wait for a candle body close above a long-term resistance line and then enter the trade there. Then you benefit from the initial move, and in this case was about 27%. However, that comes with significant risks, as the price action could very easily just roll back down, and we want to try and avoid that. So under most market conditions and most circumstances, traders will look for the safest entry, and that entry is where you buy the retest, which is another way of buying the breakout. So for buy the retest, of course, you watch the initial breakout happen, you don't enter your trade yet, and you wait for the price action to come back down to confirm the SR flip, which is essentially where this line flips from resistance to support. Now, this is also where a lot of other buyers enter, so you're entering the market with a lot of other people with the same idea, which is one of the reasons why it's quite safe. However, there's another reason why it's a good strategy. So let's say, for example, I was going to trade this. So I wait for the price action to come down. Perhaps I don't enter when it revisits this trend line for the first time, as I want to see if there's a bounce. Now there is a little bounce, so I'm like, okay, this is good. I'm now going to enter when it touches the trend line again, perhaps forming a double bottom. So I enter here exactly at 5036, which is exactly on the trend line. Now before I do, of course, I'm going to have appropriate risk management in place. I'm going to look at where's my trade invalidation line. How low does it have to go for me to exit the trade? So I'm thinking this is kind of the next level down. So I'm going to put a trend line here, I'm going to turn it red, make it dashed, and this is going to be my invalidation line. So I'm looking to buy the retest here, but if the price action comes back below this line, I will exit at a capped loss. And my loss here would be about 4.5%. So I've got my invalidation line in place, or my stop loss, if that's the way you want to work. For me, I would just put an alert on here and exit manually. So if the price action comes below this line, after I've entered, I will exit at 4.5% loss. But there's another component to my plan as well, because most likely I won't have to incur that loss, even if this trend line doesn't hold, even if when I buy the retest, the price action continues lower. Because if this trend line can't hold and the SR flip isn't confirmed when I enter, it's very likely that before the price action continues lower, that traders will want to check that this trend line has now moved back from support to resistance again to confirm the SR flip in the opposite direction. And that gives me then an opportunity to potentially exit at minimal to no loss. Let's just work through what I would have done. So I enter here. Right now, when we get the second touch of this trend line, I'm aiming to buy the retest in the hope the price action will continue higher like this. But in my case, I enter here at 5036, and unfortunately, the price action comes down, but it doesn't reach my invalidation line. Traders want to check that this trend line has now flipped back from support to resistance, and therefore for the next few hours the price action is hopping around this line and touching it quite frequently, giving me many exit points at minimal to no loss. So I see the price action come back down, I see the fact that the price just can't get back above it, there's no candle body close above it, so I can exit again at 5036, just where I entered, with no loss. And even if I miss that, even if, for example, I'm not paying attention to the chart and I've popped out to the shops or something, there's plenty of other opportunities. You see here, it comes back up again for a bearish retest, and it gives me 2 opportunities to get out at no loss and several opportunities to get out at minimal loss, and at no point does it cross my invalidation line. So I can happily enter this trade, see it go bad, and then exit at no loss. And this happens frequently all of the time, because the price action has to put in a bearish retest typically before it can continue lower, because traders, or rather sellers, need to confirm that the buyers haven't got enough strength to push it beyond this line. So unless something terrible is happening in the market, most of the time, if a retest fails and the trend line can't hold, you will have several opportunities to exit as a bearish retest is put in before your invalidation line hits and before you have to incur a loss, which is why buy the retest is the safest strategy, because it allows you to hop into trades, see if they go higher, and if they don't, you have several opportunities to exit at no loss before the trade invalidates and before you have to incur any major loss. And that's why buy the retest for most conditions is the best way to enter a trade, because it's the safest and it incurs minimal to no loss most of the time. But of course, if you don't get the bearish retest because maybe Bitcoin's crashing and the price action just comes straight back down, you've still got your invalidation line, you've still got your stop loss, and you've still got a secure plan to incur a reasonable and manageable loss of just 4%. And then you've got your money, you can go and have another try with another trade, and hopefully that time buying the retest will be successful and the price action will continue higher as you want it to. Just a little video about how you should manage these sorts of trades. Hope it was helpful.